Joining us now is Dr. Kang, the head of global demand and Asia analytics at Platts, Singapore. Thank you so much for your time. Look at the kind of volatility that we've been seeing, the way crude prices have moved up since the start of this year. If you just look at last night, we saw Brent surpass $99 a barrel. It has now retreated. We've also now seen how oil from Iran may also enter the world energy market. Before we go any further, would love to have your views on, should we get ready for a triple-digit mark when it comes to oil? Is that going to be the normal? Or do you think it's going to maybe be, the levels we've been getting used to, $75, $80?
Thank you very much. Before, how to say that, there are plenty of reasons to see why oil prices are high today. You mentioned $99 for the futures oil futures price for Brent, and dated Brent, of course, also stay very high. Those reasons are all there. Supply, on the supply side, we have concerns on some interruptions and some constraints, and the demand is kind of resilient. I would say that not collapsing as some may think. Over the Omicron and other cases that still stay on course. But to answer your question, going forward, the fundamentals do suggest, we do have oil, barring, short of saying that there is a disruption of the Russian oil supply. That is not the most likely case right now, despite the situation in Russia, Ukraine. So we see that oil supply will continue this year, and through from both OPEC plus and non-OPEC, and demand also recovers. But supply is there too, and seasonally, with the maintenance of a season and relatively kind of low demand season in the first quarter, we do see that fundamentals suggest the market will ease in the next few months, if not few days and weeks, because of the current tension. You mentioned Iran, that will affect the second half of the year. So all the fundamentals suggest that there will be oil coming to the market. But currently, the premium, we call it premiums, right, of the geopolitical risk, and also the worry about the potential worry about the supply leading to the buying to filling the storage, that will continue to keep the prices at high levels for now.
So high levels will continue for now. We've of course spoken about the Ukraine-Russian conflict. The sanctions have begun, but is this what is the energy market looking at very closely? So far, what President Joe Biden has signed, what the United Kingdom has said, the kind of noise that we're getting from other allies, including Japan, it's left the energy market out when it comes to the sanctions. And one has to get realistic. Russia does control the natural gas market in Europe. I don't know if Europe is in a situation to impose sanctions on Russia when it comes to this.
You're right. Yeah, you noted correctly that the sanctions are taken so far by those three countries and including Europe, Western Europe. So far largely leave energy, oil and gas, largely outside the sanction, except for like Germany's decision to suspend the Nord Stream 2 project sort of approval. The things are still going on, so there's still quite a bit of uncertainties there. But our sort of kind of most likely reference case is this will be likely to continue without seriously interrupting the oil first of all oil supply from Russia to the rest of the world. And we are particularly talking about something like 2.7 million barrels per day of Russian crude supply to European countries. and a little bit more to the U.S. That right now is seems to be okay, but the situation is still unfolding on the ground. So there'll be uncertainties. Yeah, we do assume that part of the oil will largely stay intact, and that is the basis of the view that the prices will eventually come down after the everyday sort of crisis is eases.
That's right. With the pipelines and other ways that Russia is controlling, especially in Eastern Europe, it's difficult to believe how EU can impose sanctions on Russia when it comes to energy in particular. Before we let you go, the other big global development which we're watching out for, and has that also led to retreat in prices or can lead? If we actually see a convergence on the Iran nuclear deal, if that happens in Munich, we'll have more oil in the world energy mix.
You're right. More oil. Timing is a critical issue, right? So currently the market concern or market sentiment is on a short term. Is particularly whether or not there will be an interruption to the Russian oil supply, which we think that it will not be affected under the current sort of case. But of course, it seems continue to develop. Iran deal, certainly there's positive development for the past day or days regarding a full agreement on Iran deal. But regardless, the Iran oil is unlikely to come to the market until after April, May. For the second half of the year, if everything else is held the same, there will be more oil coming to the market during the second half of the year, starting from even as early as May. That will certainly come to enhance our review that the price you mentioned earlier that the price could be if fundamentals sort of dictate the market without Russian oil interruptions by the second half of the year, we are looking at something around maybe lingering around $80. Could it be going below $80? Could be slightly higher. So that is in the middle of it, of course, in certain season like the summer and the fall, they'll be a little bit tight. But overall, we are not in a $100 and $150 range for the year, but rather it's below that, more like $75 to $85 range if the fundamentals dictate.
Okay, so you are seeing that maybe we will see crude oil retreat all the way to $80 a barrel. Of course, a lot of it is on timing. As we've been talking in this interview, it will be very, very difficult to sanction Russia, particularly as far as energy goes. It controls the tap, especially for Eastern Europe and many other countries too. We'll take a short commercial break. Dr. Thank you so much for joining us live today. We'll pick up on the markets, get you trading ideas, and return with Chartbusters.